Kamala Harris, according to Alan Lichtman, is going to be the next president of the United States. So we have to get ready for her tax plan, of course. It'll have to go through the proper channels of Congress and the Senate and the House of Representatives and so forth. But I wanted to try to break down and understand what she wants to do. And this I do know. She's up for the middle class. And if you have a lot of money, you're probably going to get nailed if she gets her way. So we're bringing in tax expert, CEO of Decision Financial Services, Monika Hengesbach, to join us. Monika, thank you for joining us on Nightside.
Oh, well, thanks for having me. I appreciate it.
Well, we appreciate you coming on. Let's start with there's a couple of things here. Let's start with the child tax credit. I thought it was $4,000, but then I read that it's $6,000. And how exactly would that work?
You know, that's actually a good question. It's mainly for parents of newborns. So what she's trying to do is bring back that pandemic era expanded child tax credit that we had, where they increased it. If you had newborn children, you would get an extra couple $1,000s. If you had kids that were under the age of 17, you would get a few more thousands of dollars and things like that. So what I'm hoping, because so far what I was reading, during the pandemic era, they got that in a refund, which made it an absolute nightmare because some people didn't want it, and then they got it, and then they had to report it. It became a disaster when taxes were filed. So this is supposed to be a credit that she'd like to give for everyone that has newborn children of $6,000 to go against their taxes.
And it's just
pretty much what that is.
And I get that. I totally get that. I'm on board with that because I don't think it breaks the bank, if you will, when it comes to the tax situation. And I think that it can help families. I think that can really, if you have, a couple of newborns or what have you during a time, I mean, if it's 12 grand or $6,000 that you don't have to pay taxes on, I think that can be a big help to a family. I think that makes sense. What do you think about that? Or do you have an opinion on this, or you want to remain objective just as a financial consultant?
So I think that this is something that could benefit families. We're in an era where both parents have to work now. It's no longer, we can't afford to have one parent stay at home. And so then the rising cost of daycare to put your children in there, that was the big thing that happened when everyone was at home due to COVID. They realized how much money they were saving just in daycare alone by someone staying at home. But then now with inflation, I think it's all changed. So giving this incentive to families to be able, I mean, the $6,000 a year, truthfully, is a drop in the bucket when you really compare to what the child care cost is out there. But I do have to agree with something like this to help families out with child care costs is a good incentive. Yes.
Well, I also think it's passable.
This would be passable, yes, because, that is one of the big topics that is actually making headway this year is family. Everything that both parties are coming out talking about family and family relations and doing everything for family. I mean, you've got Trump talking about now IVF. You've got his vice president. We all know what he said. So we've got quite a bit where this is really making headway, and I think it is a passable tax credit.
You're heading in the right direction. And
correct.
At one point in time in this country, if you made six figures, you would, this is great. But that's not the case anymore. And speaking for myself, where two kids in college, and and Syracuse is 90,000, and this school is 80,000, and this, and you want to try to send your kids to the best schools, but it can cripple somebody. So it's not only when you're raising a family, it's not only just taking care of the kids until they're 18, but what are they going to do after they're 18? And college isn't necessary, but you still have trade schools, which I'm an advocate of big time. Have you tried to get a plumber lately? Seriously, I totally said that. Like, there's just this unfair expectation that every kid, at least in my town, every kid has to go to college. I'm like, why? Yeah. Why does every kid have to go to college? I do believe that you need further study. I do think you have to have a skill. You have to have something to offer, unless you're a freaking genius, and you can go and invent Microsoft or something like that.
Sure.
But I think you have to have the skill. So that can be a less expensive alternative. But if you want to try to send your kid to college, it can actually impact how many kids you want to have. If you sit back and you say, okay, I'd like to have a big family, and then you go, well, wait a minute, it's $400,000 to send a kid, so it's going to cost me $1.2 million to send a kid to college. You know, it's crazy. So anything you can do to help families, I just think it's the right thing to do. Not to mention the cost of living. Of course, we live in New England where it's insane. The cost of living is just completely out of control. So
yeah, and the kids are now coming back at home because the money that they're earning once graduating from college isn't able to afford rent, and so they're moving back with their parents with large student loan debt. If you weren't one of the fortunate ones that planned early or had the residual income to put in a 529 plan, now it's taken away from the parents' ability to save money for retirement.
Well,
so it's a vicious cycle.
It's terrible. I mean, we did a 529, but do you know how much you have to put away?
Yes.
You
do. I have a child that's back home. Yes.
Right. I mean, you have to put away hundreds of thousands of dollars for post-secondary education. Well, I mean, I paid $20,000 to go to the University of Maine. You know, don't get me started on the cost of post-secondary education. I think it's a scam. Yeah. I think it's just a complete scam. But I'm also not a communist where I want cost control on our school system. So I'm bitching and moaning, but I don't have a solution. You know, I don't have a solution yet. The small business tax credit was $5,000. They want to send it up to $50,000. I know nothing about this. I'm not a business person. A lot of people have, it'd be so cool. You know, we should start a business. I'm like, I don't think you realize how hard it is to start a business. So what is this all about? Is this doable, and is it a good idea?
So there's already a current law that you're able to write off, which you just mentioned, $5,000 of your startup expenses right off the gate, and then up to $50,000. So the $45,000 remaining. Let's say you started a business, you spent $50,000 in startup costs. $5,000 you can get immediately a write-off and expense it. And the current law says for the remaining $45,000, you need to amortize that over a 180-month period. So what this new law, that tax thing that Kamala Harris wants to pass, is that there is no more amortizing of it. So if you spent $50,000 in startup expenses in your startup business, you're able to write off $50,000 in that year.
Now, can you write off if you're already at a loss? So say the first year, it's generally if you start up a new business, you're not profitable the first few years.
Correct.
So
Correct.
You add this onto your loss already?
So you add it onto your loss already. And, this can get down in the minutia. It depends on the type of structure you're in. But let's just say I'm a sole proprietorship, mom and pop, put the shingle on the door. I have this $50,000 loss and some other losses with my new business. So let's say a total $60,000. I can claim the full $60,000 loss on my tax return. Now, do I get that loss if I didn't have any income? So let's say my husband doesn't have any income, it just shows a loss. That $60,000 will carry forward to the next year to go against any income that we may be reporting. Or if I do have a spouse that's working, my $60,000 will go against their income that is being reported on the tax return and help lower our overall taxable income in the first year.
Okay. I don't know. What do you think of that?
I think giving an incentive to, truthfully, my opinion, this is purely my opinion, I think where we sort of got away from is the United States was built on manufacturing. I mean, we were known for manufacturing. We were known for making goods, and we were known for creating jobs. I mean, people were flocking to the U.S. through Ellis Island back in the day because this was the land of opportunity. And somewhere along the line, we kind of lost that. So I think any incentives that can help small businesses to want to, get established and started, I think is a great idea. Where I think this one fails is the fact that it gives you all of that loss as a startup. So startup means startup. That means you haven't earned revenue. You haven't started your business. You're just incurring all these expenses, paying legal fees, maybe buying product that you're going to sell. Things like that. That's what you're writing off with this $50,000. But then when you start to have the businesses starting to have income and maybe starting to have that profit, a lot of these small businesses are still struggling because now they're paying self-employment tax. They're paying all of this higher tax, and they have no write-off. They have no incentive or anything that can go against it. So with something like this, I sort of struggle because I don't see the benefit that's going to help the small businesses in the long run. I just think this is a one-and-done type of credit, and then they're on their own.
Well, that's a very good point. And I want you to elaborate on that. We're going to continue that conversation. Then we're going to get into the big one, the big enchilada, the capital gains. That's that's a hot one. And quite frankly, I think that has a snowball's chance in hell of passing. But we'll talk about it coming next on WBZ's Nightside.
Live from the Window World Nightside Studios on WBZ News Radio.
Okay, tax expert Monika Hengesbach is joining us from the Decision Financial Services. Wanted to continue to talk about the small business credit. You're mentioning, Monika, and with the Kamala Harris platform, $50,000 tax credit for startup businesses. But you're right, and it's an excellent point. There are so many small businesses that are struggling out there, and why not help them and take care of what you already have as opposed to flood the market by creating more small businesses when possibly right now the economy can't support it all?
Yeah, and there's a concern. I mean, you see it quite often. You see restaurants that are closing, the mom and pops or the little boutiques or things like that these mom and pops have put it out because they can't compete. They have to sell their wares at a higher price. We have wages that are going up, payroll taxes. You can't compete. You need to offer employee benefits, all of this kind of stuff, but yet there is no tax incentive for those small businesses. So like I said, this startup expense really helps just the ones that are physically starting up. They just literally put the shingle out the door.
Well, what about small business now? There was a point in time in America where it was very important, but as you just mentioned, it's so hard to compete. When you take a look at the mega giants, if you will, I mean, I'll just point to Amazon because I think it's the perfect example. There's a lot of things on Amazon that I could get that I used to run to the corner store to pick up.
Exactly.
And you don't because you just hit a button and it shows up at your doorstep. Laundry detergent, for example. Say you're out of laundry detergent, you'd run down, like we had a store at the end of our street, Robin's General Store, right? I lived in a very rural area. It was 6 miles from the old Save More. So instead I would go to the Robin's store to pick up, I don't know, some laundry detergent or, milk, if you will. Milk's not coming from Amazon, but now you don't need to do that. I think I don't know, I guess what I'm asking is there a need for small business? Is there enough of a consumer need for the small business?
I believe there is. I think if we get rid of small business, I believe we're going to crush the economy. Small businesses has been the essential foundation for everything. It's unfortunate. It's their ideas and their thought that has brought about a lot of stuff. I mean, think about Microsoft. Now it's a huge corporation, but that just started with a small thought of a couple guys starting that industry. So
same thing with Amazon. He was selling books. Oh no, books. Netflix was selling DVDs.
Correct. So it's like that really is what we built our economy upon. And so we have to remember the small business and the incentive because they're really the ones that are out there hiring. Every time there's a glitch in the economy, we're going to an inflation, or there's just an inkling of a recession, you hear these large corporations laying off thousands of people. But you see the mom and pops just hanging on to the people that they have, right, and trying to give them what they can. So I really believe that what's going to really build up the United States again is supporting our small businesses. We really need to start supporting them.
Tax expert Monika Hengesbach is joining us here on WBC's Nightside. Okay, let's get to the gorilla in the room here, the dinosaur or whatever. 28% capital gains tax for wealthy Americans, and right now it's at 17%. And I know people like Warren Buffett have come out and have said, listen, it's ridiculous that somebody like a Warren Buffett only has to pay 17% tax because of all the different maneuvers they can do with their income. 28% sounds high, and I think she's going to have a tough time with that. What do you think?
I think it's going to be very difficult because I think if people are, again, this is based upon if you make $1 million or more of taxable income, not just income, taxable income. So that is after all of your write-offs. Your taxable income is $1 million more. Your capital gains would be at that 28%. But even then, I think if they're paying 28%, then they're not going to be that willing to invest in the market, in stock, in real estate, in any of these other items. I think it's going to spur them away from doing that and investing elsewhere where they don't have to pay the 28%, and that could hinder the economy as well. So just like her tax that she wanted to do on unrealized gains, when that came out, I'm like, I didn't even bother reading it because I'm like, oh, there's no way in the world that's even going to remotely get into ink. So, she did lower it than what Biden said. Biden wanted capital gains to be taxed at the highest ordinary income tax rate, and she's obviously saying, well, I don't agree with that, but I'm gonna push it to this 28%. I think that's going to be a big battle, and I don't think she's going to stand a chance to get that. And if she does get that, there's going to be some battle because she also wants to increase the corporate tax rate from 21% to 28%. So which one do you want more? Do you want the corporate rate being 28%? Then you can't tax the shareholders at 28% either. So you're going to have to pick and choose here. So I don't think she's going to be able to pass that one.
I'm a registered Democrat. I voted both ways. But when you talk about increasing taxings on companies from 21% to 28%, that's why they leave. It's such a balance. You just have to play ball with the bosses. You just do. You do. And I understand, what people are saying. My dad worked in a paper mill. My mom stayed at home. We had one used car. I get it. But the people that make the money, the people that have the money, that start the businesses and own the businesses, if you don't play ball with them, you could get screwed as well. Well, I think what's going to happen is the 28% will be a political plank, and she probably won't get it passed, but she can say that she tried.
Right.
Monika, thank you so much. You have been very helpful. Monika Hengesbach, Decision Financial Services. Do you have a website?
I do. It's decisionfinancial.com or a podcast. You can listen to me on the Wealthy Wallet.
I like that name, the Wealthy Wallet. That's quick, snappy, and tells you what it is. All right, Monika, have a good night.
You too. Thank you.
All right, thanks for joining us. Monika Hengesbach.